Good morning, all you magnificent melon heads of the world. I hope you guys are well. Today is Tuesday, October 15th, 2024. And if you didn't catch a stream yesterday, just a reminder, I am on the road in beautiful Puerto Rico, visiting with family this week, and hence the grainy picture and maybe the slightly echoey sound. Mobile setups are always difficult to do the streams with, but we do not miss live streams on this show, at least not the morning shows. Every now and then we miss the Friday afternoon. Well, we got a lot of news going on this morning, guys, and definitely important that we got this one off because oil is front and center today. Now, I've been talking a lot about oil for the last couple of weeks, especially because of the geopolitical risk. You guys could recall, like last week in some of the streams, we were talking about these two big, diametrically opposed forces pulling on oil prices. You've got the shrinking demand story, the global recession, trade slowing, OPEC lowering their forecast for oil growth, plus the possibility that the Saudis would abandon their $100 oil target. That would be pulling oil prices way down. But at the same time, we had this geopolitical risk that the market had up until about 2 weeks ago been largely ignoring. But this Iranian missile barrage and the Israeli threat of retaliation was a very real risk that oil prices could spike dramatically if the Israelis decided to hit Karg Island, that all important island where Iran exports most of their oil. Well, we had a big development yesterday, late in the afternoon. The Israelis, there's an unconfirmed, anonymously sourced report. I want to stress this, guys, unconfirmed, anonymously reported or sourced, but a lot of different outlets are reporting this. And we know a lot of geopolitical reasons. A lot of the politicians leak these things through back channels. But apparently, the Israelis have taken hitting the Iranian oil facilities off the table. And if that's the case, then all upward pressure on oil prices is now gone and oil prices would fall sharply. And that's exactly what they're doing this morning. Oil is down a couple of bucks. It was down a little bit more a few hours ago, but still 3.5%, 4% lower for WTI crude this morning. The story, again, it was anonymously sourced. I want to stress that, guys. There's so much junk floating around in the media these days, especially when it comes to like some of these China stimulus stories, and they've kind of blown up in our faces over the last couple of weeks with some real volatility in Chinese stocks. So take this with a grain of salt. But this article in the Washington Post is basically saying that the Israelis have agreed not to hit the Iranian oil or nuclear facilities because they don't want to be perceived as interfering with the United States election by driving up oil prices right before the election, and that Israeli Prime Minister Benjamin Netanyahu, that his position and his tone softened when the United States sent a THAAD missile system to Israel, or a terminal high altitude area defense system, basically our best missile interceptors. So, look, there's a lot to unpack here in this story. And there's a lot of, what could I say? I mean, this is obviously a sensitive subject, guys, and please go easy on my moderators in the chat, guys. I know this is a subject that brings a lot of passion out in some people, but there's a lot of different ways you could look at this. First, let's look at this with a absolutely simplistic view of things. World War III won't be starting today, or at least it won't be escalating today. So, on the whole, this is a good thing, right? If we just look at this in a vacuum, the Israelis are not going to hit the oil facilities. The Iranians have kind of telegraphed through back channels that, hey, if you don't hit the oil or the nuclear facilities, then we won't retaliate to your retaliation, which was retaliation for the retaliation for the retaliation, going back however many thousands of years this stupid conflict has been raging for. So at the very least, things are not going to get much worse right away. That's a big asterisk. Now, on top of that, when you strip that out, there's actually a lot in here that's pretty messed up in this story. All right. Besides the fact that civilians on both sides are dying, this is silly, this is stupid, this is bloodthirsty. But what do you actually have? You have United States military personnel on the ground in Israel in harm's way because a THAAD system is a juicy target of opportunity. Why are they there? They're there so that the price of oil doesn't go up right before an election. That's kind of messed up. All right. So, depending on how you want to look at this, guys, you could say, okay, worst case scenario off the table. Good thing, That's easy to say if it's not your son or daughter who's operating that missile system in the middle of this missile barrage on the regular. Why? So we could save a dollar on a gallon of gas heading into the election season. So depending on how you want to interpret this, guys, you could go either way with this. But let's settle on, at the very least, everything's not going to hell in a handbasket today. I think we can all agree at the very least that is a good thing. And then, you can argue the gray area about morality and the ethics of all the deal making that's going on and the innocent people caught up in the background. Guys, you'll be red in the face and you won't settle anything. So let's just take the good in a vacuum. All right. World War III not getting worse today. We got a lot of other things going on this morning also in the business world. We've got news from Walgreens. Uh, Mish and I were talking this morning on our morning phone call before the briefing. What the hell is going on in the pharmacy industry? Not the pharmaceutical industry, mind you, the retail pharmacy industry, right? Rite Aid going bankrupt. And now we got news today that Walgreens is closing 1,200 stores. Now, it didn't specify precisely in the United States, so I'm assuming I don't know how many Walgreens there are in Europe or Africa or Asia. So probably not all in the U.S., but I'm guessing predominantly in the U.S. 1,200 stores closing. That's a lot of jobs going away. That's about 14% of all Walgreens stores. This Walgreens reported earnings today. They reported a $3 billion loss. Now, I think that was largely influenced by some of the accounting gimmicks that go on with this massive opioid settlement. There was a reference to something called, what was it, a tax deferred assets, something to do with tax treatment and this big payout that they're having to make because of the pharmaceutical or the opioid crisis. Suffice it to say, about a quarter of Walgreens stores are not profitable, and they're shutting down a lot of them. A lot of people are going to lose their jobs. Again, it kind of flies in the face of this soft landing narrative. We're seeing this. We just talked about 17,000 layoffs at Boeing yesterday. Now we've got 1,200 Walgreens stores closing. So yeah, guys, stocks making all-time highs. Nvidia made another all-time high yesterday. Number go up. AI is great, awesome. But at the same time, stores are closing. People are losing their jobs. How much longer can asset prices just go up continuously while the life of the average person gets more and more miserable? Well, truth be told, that could actually happen for a long time. And if you think I'm kidding, take a look at the Venezuelan stock market. It's not exactly something you want to aspire to, but that is what's going on here. We also got news from Boeing today. Big news from Boeing today. They are raising buku cash over at Boeing. $25 billion, as a matter of fact, in what's being called a shelf offering, which is basically Boeing saying, hey guys, we're filing with the SEC. We're going to raise 25 billion bucks. That might be in the form of bonds. That might be in the form of new shares issued. Either way, we're going to raise a lot of cash. And if you are one of these machinists and aerospace workers who are on strike right now, and you're reading this story about $25 billion of cash being raised by Boeing, this is a big deal. This dramatically strengthens Boeing's position at the negotiating table now that they've got essentially 2 years worth of cash, or access to 2 years, or plans to raise 2 years worth of cash, because this strike is costing the company a little more than $1 billion a month. And so this really strengthens Boeing's position and weakens the negotiating position of the union. It doesn't necessarily mean the strike is over or going to be over anytime soon. Actually, it means Boeing is settling in for a long, drawn-out conflict. Combine that with the 17,000 layoffs. This new Boeing CEO is not messing around. Kelly Ortberg, he's cooking with gas over there, and he's not being gun-shy. He's playing hardball with the union here. We'll see what that comes out of that strike with that one. So that one's going on today. We also got a lot of bank earnings today. We're not going to get to every one of them because there were so many earnings reports out there. United Health, J&J, Citigroup, PNC. But the two we'll focus on, Bank of America and Goldman Sachs. Both beat expectations. Goldman Sachs, huge increase in their profit versus a year ago. It's being driven by trading revenue and investment banking. Also, remember, Goldman Sachs is losing money in their ill-fated foray into commercial banking or retail banking. They're getting out of that business. They're still taking some big one-time charges related to that business. But guys, all this volatility in stocks, number go up in the stock market day in and day out. It's very profitable for the banks. All of the banks are reporting declines or very modest growth in their net interest incomes, but they're all reporting big time trading revenue. And investment banking is making a comeback now, too. We're starting to see that with Bank of America's earnings as well. Big time growth in investment banking. Now, remember, guys, there's been a dearth of deal making for the last couple of years. The Fed's rate hikes basically put a kibosh on a lot of merger activity. Other than the oil space, there were some mergers in the oil space, but for the most part, it's been a pretty quiet couple of years for M&A, certainly for the IPO market. Well, that is starting to change. A lot of optimism around these Fed rate hikes, and it's starting to show in the investment banking numbers being reported by the big banks, and those are covering up declines in net interest income, which is typically a very bad sign for banks, but not when they're making so much money off of trading and investment banking. We got a lot to get to today, guys. Let's shrink my big melon of a head and see what's going on in the market, shall we? Don't forget that like button for the algorithm. And if you're new here, hit subscribe. Normally, we have better picture and audio quality, but again, we're on the road here today. So come and have your coffee with the melon heads as we go through markets. And right now, the S&P 500 is up a measly 6 points. It's just barely positive, 0.11% to the upside. The Dow, meanwhile, oh, what happened in the Dow in just the last couple of minutes? That is interesting. I'm not sure what happened at 9 a.m., guys. Something came out that sent the Dow lower, possibly those United Health earnings, but I didn't think the United Health earnings were that bad. Anyways, UNH is a big component of the Dow. I think it's the biggest component in the Dow. That could be what's taking that one down 115 points here this morning. And of course, the NASDAQ is up because that's all the NASDAQ ever does is go up. The Tech 100 futures up 30 points, 0.15% to the upside. Meanwhile, we got the US dollar slightly weaker here, 22 basis points down, 0.21% in the red, but still above 103, 103.08. So the dollar is taking a little bit of a break from its rally recently. And in the bond market here, we've got a lot of red in yields. Keep in mind, guys, lower yields, that's bond prices heading higher. The 30-year Treasury at 4.353, that's down almost 3 basis points. The 10 years at 4.056, down almost 7 basis points. Big move down in the 10-year this morning. The 2-year Treasury, 3.937, that's down about a half of 1 point. And the 1-month Treasury is also down about 2 points here at 4.815. So yields down across the board. And looking at the commodity space, it looks like gold is liking the weaker dollar and the lower yields here. $2,650 for spot gold. That's up about $2, 0.08%. Spot silver also up a couple of pennies here. 31.21 for silver. That's up about 0.1%. Copper, meanwhile, down about 1.25%. That is not a good sign for economic health. Platinum is down 1.2%. Palladium is down 1.6%. And look at the move in WTI crude here, guys, down 4.6% this morning, just barely above $70, trading at $70.45. And, well, oil, let's talk about oil here, shall we? Netanyahu tells the U.S. that Israel will strike Iranian military, not nuclear or oil targets. This is in the Washington Post today here. And a lot of political maneuvering going on here. The signal is being seen in Washington as a sign of restraint after concern that Israel's strike on oil or nuclear facilities could trigger a wider war. And I don't get this comment about, oh, we don't want a wider conflict. I mean, I understand we don't want a wider conflict, but we've got Iran is attacking Israel. We've got Hezbollah is attacking Israel. Hamas attacked Israel. Israel is attacking Iran and Hezbollah and Hamas in response. And then you got the Houthis and the blowfish over there jumping in the Red Sea and the Bab el-Mandeb Strait. So by my math here, I'm looking at 4 different countries, 5 if you count the United States, that are already involved in this not wider conflict in the Middle East. Okay, apparently it's not wider. I'd hate to see what wider actually looks like. But Israeli Prime Minister Benjamin Netanyahu has told the Biden administration that he's willing to strike military rather than oil or nuclear facilities in Iran. That's according to 2 officials familiar with the matter, suggesting a more limited counterstrike aimed at preventing a full-scale war. And there's those guys, man, those people familiar with the matter. These people are everywhere. They're involved in every story in the financial press. Who is Mr. Familiar with the Matter? Is this the Chicago familiar with the matters? I don't know. Nobody ever names their sources. Everything is always anonymously sourced. That way, there's no accountability if the story ends up being wrong. So, guys, this is a very big story with massive implications for the economy if it's accurate. But remember, it's anonymously sourced. So you've got to keep that in mind here. So many of these stories these days are like this. And the reason I mention this is that, Matt, that story about the big China stimulus and how Chinese stocks were heading up in a straight line, they were all anonymously sourced. And then we got last week the announcement of what the China stimulus was going to be, and the stocks tanked because there was almost nothing in the package. So that's the reason why I'm really drilling home. Be careful with anonymous sources here. That's the only reason. But this is such a big story that I can't not report it. Just got to put that grain of salt in there for you guys. In the 2 weeks since Iran's latest missile barrage on Israel, its second direct attack in 6 months, the Middle East has braced for Israel's promised response, fearing the two countries' decades long shadow war could explode into a head on military confrontation. It comes at a politically fraught time for Washington, less than a month before the election, and President Joe Biden has said publicly that he would not support an Israeli strike on nuclear related sites or oil sites. When Biden and Netanyahu spoke on Wednesday, their first call in more than 7 weeks after months of rising tensions between the two men, the prime minister said he was planning to target military infrastructure in Iran, according to a U.S. official and an official familiar with the matter. There's that guy again, Mr. Familiar. Like others in this story, they spoke on condition of anonymity such that they can avoid accountability for what they were saying. The White House had no immediate comment. The Israeli Prime Minister's office said the statement that we listen to the opinions of the United States, but we will make our own final decisions based on our national interests. The retaliatory action would be calibrated to avoid the perception of political interference in U.S. elections, the official familiar with the matter said, signaling Netanyahu's understanding that the scope of the Israeli strike has the potential to reshape the presidential race. An Israeli strike on oil facilities could send energy prices soaring, analysts say. It's not could, it definitely would. While an attack on the country's nuclear research program could erase any remaining red lines governing Israel's conflict with Tehran, triggering further escalation and risking a more direct U.S. military role. Netanyahu's stated plan to go after military sites instead, as Israel did after Iran's attack in April, was met with relief in Washington. Netanyahu was in a more moderated place in that discussion than he had previously been, said the U.S. official, describing the call between the two leaders. The apparent softening of the prime minister's stance factored into Biden's decision to send a powerful missile defense system to Israel, both officials said. After that call, the president was more inclined to do it. On Sunday, the Pentagon announced that it was deploying a anti-ballistic terminal high-altitude area defense or THAAD battery system to Israel, along with about 100 U.S. military personnel. U.S. officials announced Tuesday that an advanced team of personnel and initial components for the system had arrived in Israel the previous day, and more personnel and components would continue to arrive in the coming days. So, guys, that was a lot to unpack there. But look, good thing it's not escalating, but it's not escalating because we want to avoid the humanitarian cost. It's not escalating because it's right for humanity and let's give peace a chance and global peace and not kill people in their beds. No, this conflict is not escalating because we wouldn't want oil prices to spike in the lead up to an election. And so we'll give you missiles if you hit what we want you to hit instead. And we'll give you our people, American soldiers, boots on the ground in your country in harm's way because we can't have the price of oil going up right before an election, especially not when we gave away half of our strategic oil petroleum reserve a couple of years ago because we wanted the midterms to go a certain way. Again, it's all politics here, guys. But again, take the win. All right. The war is not escalating. Take the win. That's the only thing I could tell you here. There's plenty to bicker about as well. Also going on in the commodity space, let's talk about this one real quick. Bitcoin doing well again here. Although it's down this morning about 110 bucks on Coinbase, big spike in Bitcoin prices yesterday. We actually broke 66,000 for a couple of minutes there yesterday. We're threatening to go back above 66,000 here. Now, the other important thing I want to point out here, guys, I kind of hastily drew this little bull flag pattern yesterday on the stream, but notice where the wick on this candle goes. We broke out above that pattern and then came down this morning and we kind of touched that line. Don't use that line as a metaphorically red line in the sand, if you will. Again, I just kind of drew that in haste yesterday, but you can see how we're already back testing that down channel that Bitcoin was in. If we break out of this bull flag pattern, let's zoom way out on the Bitcoin chart. All right. If we really are about to break out of this pattern, then you better believe $100,000 Bitcoin is in the cards in short order here, especially with central banks around the world heading back into dovish mode, cutting rates, printing money, China doing whatever the hell they're doing over there. You better believe Bitcoin could be setting up for a big breakout here. It's not confirmed yet, but the potential is there. That's something to keep. Walgreens, they say they're closing 1,200 stores by 2027 as earnings top estimates. Earnings top estimates, their earnings were pretty bad, guys. They lost $3 billion. Walgreens reported fiscal fourth quarter sales and profit that beat expectations, reflecting the company's efforts to slash costs. The retail drugstore chain said it plans to close roughly 1,200 stores over the next 3 years. So it's not going to be an overnight thing, but that includes 500 closures in fiscal 2025 alone. The results cap a rocky 24 for Walgreens, which is grappling with pharmacy reimbursement pressure, softer consumer spending, and challenges related to its push into primary care. I just want to add this paragraph here. The company reported a net loss of $3 billion, even though their profit beat expectations. A net loss of $3 billion or $3.48 a share. This reflects a so-called valuation allowance meant to reduce the company's deferred tax assets, mainly related to opioid settlements. And guys, I would love to tell you what that means, but I have no idea what valuation allowance meant to reduce the company's deferred tax assets means. My guess is it means something like we owe so much money because of all the opioids, which is basically heroin that we gave to people in exchange for profit. And sorry, we killed tens of thousands of them. And now we owe so much money that our accountants have figured out a way to avoid paying taxes because of that. That's my interpretation of that statement there. This $3 billion paper loss compares with a $180 million loss from the year ago period. But Walgreens shares, look at the stock, up 6.5% pre-market this morning. Why? Because this market loves layoffs. This market loves store closures, especially stores that are not profitable. So Walgreens stock is doing pretty well here, even though a lot of people are losing their jobs. And speaking of people losing their jobs, we talked about Boeing just yesterday. 17,000 Boeing employees losing their jobs. Look, guys, things are not looking very good for the union here in this strike in Boeing. I don't want to take sides in the labor dispute or anything like that because I'm not really involved in it and I don't have all the information, but I don't blame people for wanting a raise after their cost of living increased so dramatically in the last 4 years or so. So I'm inclined in most of these disputes, I'm inclined to side with labor, which is something that's really out of character for me. I'm typically not a big organized labor guy, but after watching inflation for the last 4 years, I can't blame them. But it's not looking good for the union here. Besides the layoffs, now Boeing has the firepower to sit there and take this strike for as long as need be. I don't think the union can go 2 years. Boeing can, because Boeing is going to raise as much as $25 billion to boost liquidity. And since the company is burning through about $1 billion a month on this strike, well, yeah, that's almost 2 years worth of liquidity. Boeing is prepared to raise as much as $25 billion in debt and equity, giving the troubled plane maker the financial resources to withstand a paralyzing strike and work its way through a series of operational setbacks. The company filed a so-called shelf as a precursor to a possible equity increase, according to a filing on Tuesday. The funding can be made of debt or equity and take a number of forms. So we don't know exactly what they're going to do here, but that $25 billion number, that's pretty important. This universal shelf registration provides flexibility for the company to seek a variety of capital options as needed to support the company's balance sheet over a 3-year period, Boeing said. This added firepower will help Boeing improve its bargaining position with striking workers who have halted production at the key Seattle area facilities for a good month now. Unions are seeking higher wages and a reinstatement of pensions, and talks broke down last week as both sides dug in on their demands. Boeing stock is up almost 1% here this morning. It's not flying here, $150.38. That's up about $1.40 this morning. But this is definitely good news for the company, not so much for the union, especially not considering the announcement of the layoffs yesterday. Things are getting pretty rough for those machinist unions. Also, we had some bank earnings, guys. We're getting a little low on time here, so we're going to fly through these bank earnings. Bank of America tops estimates on better than expected trading revenue. Number go up in the stock market, and that's good for the big banks. Not necessarily such a good economy for the little guy, especially not if you work at, I don't know, Boeing or Walgreens or any of these other companies that are closing hundreds or thousands of stores. But if you're an investment banker, you're doing great and it's the best economy ever. And you've got the Wall Street Journal and Bloomberg who's going to gaslight people and tell them the economy is so good. What's your problem? Don't you know groceries are cheaper? I kid you not, guys. That's what Market Watch told us yesterday or last week. They put out an article that said groceries are more affordable than 2019. Why is everybody so angry? Anyways, the investment bankers, they're doing great. Bank of America topped analyst estimates for third quarter profit and revenue. Better than expected trading results drove that. The bank said on Tuesday that net income had fallen 12% from a year earlier to $6.9 billion or 81 cents a share. That's also being driven by higher loan losses, higher provisions for credit losses. Bank of America has actually increased their credit losses by about 25% to $1.5 billion. Also, no word in any of these articles about Bank of America's massive pile of unrealized losses on U.S. Treasuries. Nobody's talking about that. That hasn't gone away just because the Fed cut rates. Now it has gotten less problematic as interest rates have fallen. Those Treasuries have risen in value. So Bank of America's pile of losses is not as big as it was, but it was pretty big. So it's probably still a threat. Nobody's talking about that, though. Net interest income fell 2.9% to $14.1 billion, edging out the $14.06 billion estimate. So Bank of America stock's doing pretty good here. The opening bell has rung. That stock is up about 2.9. There's 3% trading at $43.15. Another big bank here, Goldman Sachs, third quarter profit jumps 45% because Goldman is much more of an investment bank versus a savings and loan here. They are doing pretty good here on this big run up in the stock market and the return of deal making. Goldman reported quarterly earnings that beat expectations. Profit rose 45% to $2.99 billion or $8.40 a share. Revenue rose 7%. Investment banking revenue rose 20%. And Goldman has been undergoing a strategy shift, exiting consumer lending after incurring billions of dollars in losses. The bank is instead refocusing on its core business of deal making. And there's a lot of optimism that deal making is coming back now that the Fed is in dovey mode once again. Goldman stock is up 3% as well this morning, $538.81. That's up about 15 and a quarter here. And last one of the day, guys, let's talk about China here. China moves to tax the ultra rich for overseas investment gains. Again, we're short on time, so we'll go through this kind of fast. There's this understanding between countries, actually more than 100 countries around the world. They share information on investment gains from citizens of foreign countries. It's this unspoken, well, actually, no, it's a written understanding. Well, all these countries saying, hey, China, you've got some citizens in the United States and they made a lot of money on our stocks last year. Here's who they are and how much money they made. Now, China has always had a law, or at least since 2018, they've had a law that says you got to pay taxes on that money you make overseas. But China has not enforced that law. But it looks like they're going to start doing that now. China moves to tax the ultra rich for overseas investment gains. Now, no word in here about how much they're planning to raise, but this is shows that China is serious about this debt crisis, mainly their local government debts. Now, there was also some important stuff in here about revenues being down. Where was it? Let me find this here. China's wealthy have been under the spotlight since President Xi Jinping unleashed a multi-year crackdown on the property sector. Where was it? There was a lot of talk about China's tax revenue being down. I can't find it. Anyways, this article had mentioned several times how China's property sales revenue is down. Their tax revenue is down. Local government revenue is down. Keep in mind, guys, China's still reporting 5% GDP growth somehow because Chinese government statistics are just made up. But if revenue is down so substantially, it's hard to believe their GDP is down. And now they're trying to crack down on wealth overseas. And also keep in mind the Chinese Communist Party, the way they pay favors and the way, if you're currently in good with the CCP, then you're going to do very well. They can pick and choose who they're going to enforce this with. In other words, political enemies get cracked down on and they get taxed. And, my friends don't get taxed. Also worth pointing out, Chinese stocks actually had a pretty rough day yesterday. Not a lot of talk about this in the press, but the CSI 300 index shown here was down almost 2.7% yesterday. So another drop in Chinese stocks, despite a lot of talk about more stimulus yesterday. This is going on, what, 7 or 8 days now, where we've seen the Chinese stock market has been heading lower here, still up sharply from where we started. And also the Hang Seng lower by almost 3.7% yesterday. That is actually, other than the initial disappointing release of the stimulus that we saw here, this was actually the biggest red candle we've had since this whole mess started. So Chinese stocks didn't do so well yesterday. Maybe the wealthy Chinese are not liking this crackdown on overseas investments. That's possible there, but not a lot of talk about the decline in China stocks in Western media this morning. And I just want to say thank you so much, Mr. Water 168. I appreciate the super chat, sir. He says, "Are you good at predicting the presidential election?" No, I'm not. I'm not necessarily good at predicting the presidential election. I can tell you this one is very, very close. Pennsylvania, Wisconsin, Michigan to watch. There's also Arizona and Nevada are close. But right now, honestly, Pennsylvania is probably the best bellwether for this election. As goes Pennsylvania, so goes the election. That is, unless Michigan were to swing or Wisconsin were to swing as well, then Trump could lose Pennsylvania and still conceivably have a path to victory if he wins those Great Lakes states. The reason I mention that is because of that big spike in initial jobless claims last week, saw a 10,000 person spike in unemployment in Michigan. That's automotive layoffs. And a lot of people, there is a lot of courting of mail votes going on right now. There's so much pandering going on. You have Trump is out there saying, oh, we want to make interest on auto loans tax deductible. He's trying to buy votes of people who are in debt in cars, and he's trying to buy votes from people who make cars, i.e., Michigan. And then, of course, you've got Kamala who says we want to give people money to buy houses, vote buying. Both sides are doing it. It's one of the reasons why I really don't think this election matters that much, economically speaking. I think both of them are going to be a catastrophe because they're both going to borrow, print, and spend. They're both going to bring inflation back. It might be a slightly different form. Trump's economic policies might be more aligned with me personally than Kamala's are. I mean, Kamala's like a full-blown communist when she's not trying to move to the center to win a general election. When it's just like unfettered Kamala, she's communist. But right now, there's not really a lot of difference. If the value of your savings, if inflation matters to you, then both of these guys suck. That's the only way to do it. I mean, I take a lot of heat from that, especially from my friends who tend to be more conservative and they're like adamantly pro-Trump. I'm like, look, he's going to borrow, he's going to spend, he's not going to cut spending. It's not even on the ballot here. So nobody represents the interests of the people who are being crushed by inflation. Nobody in this election, and that's why I think it kind of doesn't matter that much, despite my own personal leanings here. But no, I am not good at predicting elections. Thank you, Water 168. I appreciate the super chat, the support of the channel. And thank you to Aunt Janet's Wig, aka Wes. Appreciate the super chat, sir. He says, maybe just my location, but Walgreens seems sketchy. Environment feels like Kmart before the closure. Interesting. Prices higher on everything else over Walmart. And it's funny you should mention Walmart because when Mish and I were talking today, Wes, we were talking about what's going on in pharmacies. Rite Aid going bankrupt. CVS is having trouble. Walgreens shutting down 1,200 stores. I mean, people still use medicine, right? I mean, it's not like pharmaceuticals are getting cheaper or anything. And, Mish was saying people just don't really go to the pharmacy as much. You got a lot of people getting prescriptions filled by mail now, and you've got Walmarts and Targets have pharmacies in store now. So there's just not as much of a reason to go to a Walgreens or to go to a Rite Aid. And if you do, you're probably just heading right to the back. You're getting your prescription filled and you're leaving. And so these stores, the retail stores, just aren't making that much money. I mean, that article that I showed about Walgreens mentioned in the middle there that as many as a quarter of all Walgreens stores lose money. That is a dying business model, the retail pharmacy. People still using medicines, still paying more and more for them. I mean, the price of Medicare or medicine and healthcare, it only ever goes up. I mean, Ralph De La Torre needs a yacht, doesn't he? The CEO of Stewart Healthcare. I mean, these guys, they got to pay for their yacht somehow. Why don't you guys just stop complaining and pay more for your medical care? But certainly not the retail pharmacies. They're not making any money. And the opioid settlements, that was a big one there. also contributing to that. So, I don't think it's not just your area. I do get a little bit of a sketchy vibe when I go to pharmacies as well too. They're almost always empty. I just think it's a dying business model, Wes. But thank you very much for the super chat and the support of the channel. And thank you, everybody, for having your coffee with the melon heads this morning. I appreciate that very much. Thank you very much to my magnanimous melon heads on Patreon and YouTube. I appreciate everything you guys do for the channel. Just a reminder, guys, that we are moving the weekly Zoom call to Thursday this week because of the travel schedule. I got links down below to all that good stuff, should you feel so inclined. Hi, Mom. Hi, Dad. I love you guys. I'm going snorkeling today, guys. We're going to do some tropical aquatic stuff. Hope you guys have an awesome day. And everybody, until next time, live small and dream big.